everybody, it's Chris here from Serene Education with the 4 majors in this update for the 15th of June 2012, a Friday, end of week. It's going to be looking at the 4 majors, and we start with the Euro against US on our daily. Yesterday, you can quite clearly see a nice upside move after 2 consecutive days of upside on a support here at 12.45, and in doing so, breaking above this consolidative range here, which is great. That 12.65 is still in play though, guys. Just be aware that the long-term 12.6500, let me just get rid of that and make it nice and dark. You can see is previous support back here noticeably. I think we can go even further back, I think, if I'm not mistaken, all the way back to 2010. You can see quite clearly 12.65 a noticeable support here, and you can see the price has tested this in the past and failed to break higher. We are seeing a lot of buying into this range the past couple of days. It will need to close higher than that going into the new week to confirm that we should be looking for further upside movement on this pair for the foreseeable future. If that was the case, then we should look at potential target areas. You'll notice that 23.6, the 38.2 is this 2.6 at 12.6500. Break above that, as I mentioned, 50% here at the 12.80 prior resistance would be our first target, 61.8 our second target, and 78.6 which will be our third target. 78.6. There we go, which brings us back to price support and resistance way back here in early April, around the 1300. Just be aware that 1300 psychologically is that very, very important support and resistance level. I'm going to put that in nice, make it nice and dark. That's that psychological area, that massive support that we had through most of this year, and only up until May we had a breach of it, and we saw this massive selling to the downside. So as it stands at the moment now, guys, we do need to see this area here, 38.2, which happens to be the 12.65, being breached, closed higher. Nice bullish engulfing would definitely confirm that the sentiment is generally upside favorable for the foreseeable future, and then we should be targeting 50% here, just below the 12.800, and the 61.8 just below the 12.900, and then ultimately back up towards the 1300, 1305, which is our ultimate resistance level to the top side. Failure to do so, and we see a consolidation here, then we could potentially see price pulling back. If we do see a pullback, you can see the higher swing 3 days ago forming out a nice swing high here, and in doing so we could see price reverting back towards this 23.6. so it's imperative we've got to wait for a signal either way if we want to see a break higher or close lower. Consolidation here to see any further potential for trade setups. Next up is sterling. This pair over here also doing exactly what the European counterparts are doing, bouncing or pulling back over the past couple of weeks. 15,300 on this particular pair is a major support and resistance level on our weekly. Just want to bring that to your attention. Quite clearly see through September of 2010, back again in December of 2010, then September, October of 2011, and early 2012, January, you saw consecutive bounces on this 15,300. And just recently here at the end of May, we also saw a second or another confirmed bounce. So this is a major support, guys. And in doing so, this is bounced to the upside. I think we've now closed above the 23.6. Yes. Going into the end of play this week, you can see the price is spending more time above the 23.6. As long as if that maintains, then we should be looking for topside favoritism. See this is the 20-period moving average is still at its ceiling level. But you can see that price has been swinging higher, and in doing so, maintaining itself above this 15,500. As long as it maintains that outlook, then ultimately we should still be targeting our intraday the upside for our intraday entries. So even though it is looking bearish on our daily, look for that momentum to drive higher. As long as it maintains above 15,500. If it gets below 15,500 again, then we should be looking for ultimately back down towards the 15,300. So set yourself some parameters. The parameter for price to do now is to remain above 15,500. The longer it remains above 15,500, the more likely is we're going to see price reverting to the upside. And targeting 38.2 is our first initial stop, which happened to be price support and resistance here at the 15,6,500. Back up above that will bring us back to the 50% line, which coincides with the institution moving average and our price support back at 15,800. So the other scenario would be a break below, bearish engulfing to the downside, which would confirm that we should be looking for further targets to the downside at 15,300. Daily is telling us we should still be looking be aware that this is still showing negative sentiment. However, this trend line, downside trend line, is in play roughly around here, so there's still a number of days to get to between here and there, so be aware of that. Next up is US dollar Swiss franc. Here again, as I mentioned yesterday, the past week, we've seen 960 being targeted. The past couple of weeks, we've seen price trading above it. However, this week in particular, we've seen price reverting to the downside, and in doing so, breaking lower than this 960 again. It's imperative that this is to remain bullish long term. That 960 we need to see price trading above the 960, and as long as it's not trading above 960, then there's almost likely to be more resistance. And you can see quite clearly this bullish engulfing here that we saw after this indecision, it's almost been taken away after the past 3 days of trading. This prior pullback, you can see if I take the low of here in May to the high that we saw here at 975, you can see 38.2 is still in play, okay, which happened to be prior resistance and was a support recently. If this area here at the 38.2 remains a support at 950, then we could see another potential retarget of 960 quite soon. Failure to do that and a break below this would or should see us retesting the prior swing here at the 50% at the 940 mark. Below that will take us back to the 61.8, which happens to be the tweezer top of a prior resistance here at the 930. So very, very important. Going into end of week, we could see some psychological selling on this of the positions, and or buying back the positions, and these seeing a nice little bounce over here. So consolidation at this area at 950. A failure to do so and price reverse to the downside would clearly see that price would target in the new week potentially down to 50% as our first target, and 61.8 as our second target. Last pair of the day is US dollar Japanese yen. This pair, after testing some really high points or price swing support and resistance back in early March, here at 8400, price failed to materialize above that. We saw some indecisive candles and price pulled back, and in doing so, it tackled previous areas of the breakout. Notice if you want at 80, psychological run number, and price reverted. However, we were expecting price to actually consolidate to this area here or find a support. That failed to materialize, and then price broke through with a nice bearish engulfing candle here to confirm that sentiment was still negative, and we saw a sell-off after that. However, at the 78.6 retracements level, we saw price bouncing higher again and retesting those levels at the underside of the 80 mark. You just put the 78, there we go. You can see psychological 78.6 bounce higher, and taking us back above the 61.8 again, and just failing to trade high into the 80. A lot of resistance. We've had 1, 2, 3, 4, 5, 6 days of consolidation at the underside, and sure enough, this morning on the Asian session, Japanese keeping the interest rates to 0.10%. We've seen a lot of selling into this. So if price remains below the 61.8, then ultimately we should see price reverting and targeting the 78.6% line below us at here, just here at the 77.70 mark. The institution still above price, below price, so acting as a nice support here. The moment it gets below the 61.8 and the institution, then we should be looking toward targeting that 78.6% line for the foreseeable future. Price is still making lower swings, and lower swings depicts downside movement. CTC confirms that. It's red all across the board. We have had a blue arrow here. However, we are in a negative situation in terms of where we're trading in comparison to a price support and resistance. We're trading at the underside, and as long as this maintains that outlook, then we should be looking for selling opportunities to arise. Okay, this scenario will only change if and when we're trading above the 80. So until further notice, we're looking for selling opportunities to the downside. That's it, guys. That's the end of the week. Hope you have a fantastic trading day today, and you have a fantastic weekend with family and friends. Please keep your trading simple. I cannot keep referring it. It's so important. It's vital that you follow that up with sound money management rules, and follow the rules of this particular template if you are using them. They are there. They do work, and they will make you a lot profitable in the long term. So enjoy your weekend, and I'll see you first thing on Monday morning. Until then, trade serenely.